Hey everyone, welcome in to another daily editorial here on the KE Report. I'm getting an update from Heliostar Metals, traded on the TSX Venture Exchange under the symbol HSTR and on the OTCQX under the symbol HSTXF, also on the Frankfurt Exchange under the symbol RGG1. I'm chatting with the president and CEO, Charles Funk. Now, Charles, we're going to talk about news that came out just yesterday, November 21st. It's a bit of a different warrant incentive program that the company launched as a way to encourage the early exercise of some warrants to help bring in some money, finance the ongoing work. Before we get into the money that has been brought in so far, explain this program and some of the nuances around it, please.
Clearly we've had a lot of success this year with Anapola. Our vision of taking it undergrounds had considerable success with the drill bit, the met work, bringing ounces forward in the mine plan. And we see quite a few catalysts in front of us. Obviously the resource update is imminent. The technical studies and the de-risking that they bring. We're having exploration success, particularly at the parallel panel. And then we're also looking for the most rapid pathways that we can get to production with. I think that's a unique feature, is how quickly Anapola could move. And when we sat back and looked at that, they're all market cap growth steps, chances to grow the valuation of the company. But the reality is equities have been fairly tough. And so you look at companies in a similar boat and you're having to issue, a proportional amount of shares to get that market cap growth, and your share price is treading water. And so we were thinking, well, what's the smartest way that we could go about this? To not get pushed back after the resource on, now I sell Heliostar expecting a financing, on how we could bolster our balance sheet and do it in the most friendly way for existing shareholders. And so we looked within the share structure. We're around the mark, a few cents underneath 30-cent warrants. And so it's effectively a rights offering, if you want to think of it in that sense. We looked to the warrants that came with the acquisition financing and said, well, what incentive can we provide for those shareholders who want exposure to those catalysts, who have a 12 to 18 month time frame to see them all delivered, and have a chance to own a proportionally bigger part of the company and create the runway for us to be successful, as opposed to companies having to issue more stock at these depressed levels. So long answer, but trying to find the best structure to give us free air on the resource for our existing shareholders.
So let's talk about the money that's come in then. As that news was released, it said to date, holders of a little over 15 million outstanding warrants have participated in this warrant incentive program. There was a total of 46 million, little over 46 million of these warrants that are available for this. So you have brought in about $4.6 million. How much does that bring the company's cash balance up to?
Yeah, so with our last cash update, that brings us to about $6.5 million. So it gives us a strong treasury to follow through the resource, to deliver these growth exploration results, and then start to look to studies. We're at a point, once this resource comes out, where we'll lay out a plan for 2024, but it allows us to deliver the more exploration results, the resource update, and start to look at what the right timing and what the right study is for us next year.
Okay, so this resource update, this is big news for the company ever since you took over this Anapola project. What should we be looking out for in terms of time frame for the resource and key numbers to focus on?
So we've been very proud of the fact that as a company, we've delivered on all the timelines that we said we'd achieve this year. We've also had the good fortune that the results have been very good as well. So we've guided that in November, and so we're running out of days in November. We will meet that guidance for the resource update to come. And the key is that this will be a resource focused on the underground high-grade portion. So I think it's reasonable, based on the results, to expect the grade to materially increase. And the question that we're waiting for, and everyone else is what is the contained ounces that comes with that? So it's a very significant rescoping of the project. And I think very clearly it's the biggest catalyst of the year just ahead of us.
Is this resource update also going to guide some future drilling exploration programs?
Precisely. We already put out some results a few weeks ago that won't make the resource, but show in particular the parallel panel has ounce growth for us. We think that there's more of these zones to the north, We're testing some other exploration targets like West Breccia at the moment. So we think the resource that we're going to put out already has capacity to grow. Yeah, I think you'll be able to see clearly when we put that out where we see some of that potential coming from.
So, Charles, again, this is really a focus on this high grade panel. You have drilled some holes to expand on this high grade portion here, but when does it come the point where you do need to move this into going underground, maybe starting to mine or at least starting to develop underground?
Yeah, good question, which we discuss regularly. I think as we've started to get our hands around the opportunity, really clearly see it, I think there's two features of Anapola that separate it from most other development projects. The first being the speed to production. We can be in production in a 3-year timeline as a function of the permits that we have, the money that's been spent on the project. And, that's years, sometimes 5, 7, 10 years for our peer group. The key benefit of that rapid path to production is it means us existing shareholders will own more of the company when we get there. I think that's a particularly powerful step. And the other one is with these widths, with the grades that we're getting across these widths, we're consistently getting 100-meter intercepts at 5 to 10 grams per ton gold. The relatively low upfront capital, cheaper mining because of the disseminated nature of the gold, we should have very high margin ounces. So the ounces that we produce, we expect will be much more profitable than a lot of others in our peer group. So that combination of profitability of the ounces, which is cash flow, which is profit, and the speed that we can move, I think is unique. And so we're sort of looking at two pathways: the standard resource growth, technically de-risking pathway, and then we're working very hard on some plans of, well, what is the quickest way to get into the ore body? It de-risks us getting that decline down early. So that's a watch this space, but know that management's working very hard on looking for that solution.
All right, Charles. That brings us up to speed. And again, it's going to be very interesting to see what this resource comes in at. So that will most likely be, I'm sure, the next time I follow up with you or when there's any other news that comes out. So for everybody listening, please email me with any further questions for Charles, and knowing that I will be following up on that resource news. So, Charles, thank you very much for this update. I'll be chatting with you again soon.
Thank you.